So we're really talking about massive disruptions for several years. Consumers should probably brace themselves for a lot higher product costs. And this is really like a slap on the face. These are the first tariffs that are really going to hurt.
Trump is slapping 25% tariffs on all car imports from April 2nd. Joining me to talk about it, Gregor Sebastian, senior analyst at Rhodium Group. Gregor, what's your take on the tariffs?
Thanks for having me, Marie. I mean, they are obviously an escalation in what is now appearing to be the new Trump administration's new trade strategy, right? This comes on top of tariffs that have been placed on steel and aluminium earlier this month, tariffs that have been put in place against China, but also tariffs that have then been suspended against Mexico and Canada. And for Europe and also for Germany, these are the first tariffs that are really going to hurt.
Right, so a string and a web of tariffs, but how serious will these specific tariffs be for the German economy?
I would say Germany is strongly affected, right? We're currently coming out of 2 years of a recession. We haven't had economic growth since 2022. With the new debt package, there has been kind of renewed optimism coming out of the government, but also the broader business community. And this is really like a slap on the face, basically saying a lot more growth will have to come from within the EU or other trade partners, because it appears to be that Germany's biggest export product, cars and auto parts, will now face a lot higher tariffs in their main market, which is the US.
And how will this affect Americans or people in the United States who want to buy a, say, Mercedes or a Volkswagen?
We will see, right? I think the big question also, given that we have seen previous tariff suspensions and exemptions, is how long will those tariffs last, right? If they only last for a very short amount of time, and then we see the Trump administration basically backpedaling and saying, we didn't mean it. We just want to use this as a negotiation ploy to get broader market access to other markets, then the impact may be relatively limited. Under the current circumstances, and assuming that those tariffs will stick, consumers should probably brace themselves for a lot higher product costs. The US is importing nearly 50% of their vehicles. And given that also parts are affected, that also means that even the local production from BMW and Mercedes in the US will see higher prices that they will likely pass down to consumers.
Right, and you already mentioned it. It's also car parts that will be affected by these tariffs. Now, American producers also import a large amount of their car parts from abroad. What does this mean for American car companies in the United States? How long does it take for, say, Ford to shift to completely American production?
This is the $1 million question. I think the biggest problem right now is this uncertainty, right? If you are fully convinced that those tariffs are going to stick around, you probably already have some plans in the drawer of your desk, right? If you're the CEO of Ford or Stellantis or GM, and you're probably now preparing some of those investments. The problem is there's so much uncertainty whether those tariffs will stick around that companies may be waiting around before they take a big investment decision. It takes months and in many cases years to ramp up production from scratch. If all car makers are looking to onshore production in the US, there's also likely going to be a huge shortage of skilled labor that's going to be available. So we're really talking about massive disruptions for several years if those tariffs do not go away.
Right. So sticking to this reaction of car companies, how can they reasonably respond? We saw Hyundai promise $20 billion to build new factories in the United States. Is it really viable for all companies around the world to start building more factories in the United States?
I think the biggest hope in the short term really is on gaining exemptions and striking a bargain with the US and really hoping that those tariffs will not last. I think that's really the hope in the industry, that we can get around this. If that's not the case, I'm sure we will see an uptick in investment from car makers around the world to get a stake in the US market, right? As I mentioned, there are already a couple of German producers on the ground. They have, however, relatively low US content in their vehicles, so they would actually need to convince some of their part suppliers to bring investments to the US. There may also be some companies that decide, the US market is not worth it, right? There's too much uncertainty. There will also be an increase in competition if we see all those other car makers pile in and invest in the US, that they may actually decide, to forego the US market, at least in the short term, completely.
Right. And you mentioned the importance of coming to some sort of agreement in the long term. Now, Donald Trump wants a balanced trade or even a trade surplus. Is this even possible if we look at the automotive industry?
Yeah, I think the potential for a bargain in the auto industry, especially for Europe, but even for other trade partners, is actually relatively limited. I think there's more potential for a trade agreement to get rid of the potential reciprocal tariffs that may come next week, where basically the Trump administration is assigning, by the looks of it, a additional tariff that could actually come on top of the auto tariffs for each of their major trading partners. I think here there is a bit of bargaining potential because it's really about addressing unfairness as the Trump administration perceives it. So you could, for instance, offset that by buying more US goods, lowering your own tariffs, etc. In the auto sector, I'm actually not that sure if we can actually find that agreement. I think here it is really about bringing those jobs to the US. So we may see some exemptions for certain parts potentially down the line. But at the moment, I would actually be relatively pessimistic that at least as the baseline, there's always the potential for exemptions, but at least the baseline should be that those tariffs are going to be with us for quite a long time.
Why do you think that there is this lack of flexibility when it comes to cars?
I think there's various points, right? First of all, he's highlighted cars together with semiconductors and chips as one of those three sectors that the Trump administration just deems important for national security, but also blue-collar jobs, right? And I think especially on the campaign trail, you could see that the Trump administration was visiting car factories, was kind of railing even against the US's closest allies to say, car plants in Canada, car plants in Mexico are taking away jobs away from, that could take place in Michigan or Ohio. So he's really calling into question also, by the way, those tariffs are actually designed now, he's calling into question the kind of North American integrated trade framework. He's basically disregarding the USMCA trade agreement as it is by implementing those tariffs, which I think is really limiting the amount of space there is for striking those bargains, right? It's also notable that compared to some other tariffs, these are not targeted at China, right? We often think about the US starting, these tariff threats to target one of its biggest trade partners, China. But actually, China is not a major car exporter to the US at all, right? So this is really aiming at the US's allies. I think in a press conference yesterday, President Trump said, in many cases, friends have been worse than foes when it comes to the auto sector. So I think that's really limiting some of the movement that could take place in the auto sector.
Gregor Sebastian, thanks for talking to us.
Thank you so much.